In this video, I'm going to walk you through my monthly 3XP baseline review. Now, the point of this video is not as a flex, not to prove that the system works, and not even to pretend that every month is perfect. The point is to show you the review process that I go through every single week and every single month to ensure that my trading is compliant to my system. So what I'm chasing here is not green numbers and P&L. I'm chasing an execution standard with a mistake rate that sits 5% or less. I've mentioned it before in other videos, but most beginners judge their trading based on their P&L, especially when they're just beginning. And this is the wrong metric if you ask me. Obviously, at the end of the day, we get into trading to make money, but the real metric that beginners need to judge their trading based on is, did I execute the system exactly as it's written? That's the most important metric you can track in the beginning. And this is why I stress that a weekly and a monthly review cadence is absolutely crucial for a beginner to become profitable. Now, the 3XP baseline is a system that I implement which basically tracks the trades of my system that I teach to my students every month. So it gives you an idea of what the performance could look like. Now, obviously, it depends what time of day you trade, what blueprint you selected, what your risk parameters are. There's a lot of different factors that go into individual results. So this is not what everyone's trading is going to look like, but this is an overall baseline of what trading could look like should you follow the system. Now, the review is not, again, to track performance, and it's not to predict what the next month might look like or how much we could make in a year, okay? The point of this is to review, did I enter each trade correctly? Were there any mistakes? Was my directional bias correct? Confluence, everything that I teach inside of the 3XP Academy. So we're tracking an execution standard here. The P&L is just a result of that. With that being said, let's dive into it. So as you can see, this is the 3XP baseline in front of us. This probably looks like a whole lot of numbers if you've never seen something like this before, but this is our basic trade journal that we use. Now, I'm going to be reviewing the month of May. So you can see here, there was not a heap of trades inside of the system, and this baseline did actually start on the 12th. So I was not tracking any trades prior to that. So what that means is that there may have been a few more for the month if I had have tracked starting on the 1st of May. We'll see what June holds for us, okay? So this is what the baseline looks like. So inside of the journal, I've recorded all of the trades, the directions, entry, exit prices, and also the result. So we can see the R result here. We use R-based position sizing inside of the 3XP Academy so that we can standardize our losses and our wins. We have a clear idea on what to expect when we lose in terms of a strict dollar amount and a percentage of our total capital. And we also know what we can expect to win on the winning trades. Now, obviously, this is a baseline, so this is paper traded. It's paper traded based on real world conditions. Okay, so I haven't fudged entries if price didn't tap the order in. I haven't recorded that in the baseline, but you can see here this is a simulated P&L based on a $10,000 account and 3% risk per trade of the total account balance, and that's obviously compounding. That's not a static number. So we can see the equity curve, the account balance, and max drawdown. I think these metrics are really important to track. But performance aside, as I said in the intro to this video, the most important thing that we're tracking here is actually an execution standard. So the way that I track an execution is through mistakes, through mistake notes. We have a mistake rate on the performance page, and we also track screenshots. So the screenshots are absolutely crucial, I think, in a review process. Because it allows you to go back and actually look at the chart and see, was that valid? Like sometimes in the heat of the moment, you don't realize that you're making these mistakes. And then when you look back at a screenshot, you go, oh shit, that was not a valid entry. The directional bias was no good. Maybe the confluence had already been mitigated or something like that. There's a lot of different factors here. So screenshots are absolutely imperative. So my standard review process would look something like I would work my way through top to bottom for the month. So what I mean by work my way from top to bottom is I'd open each screenshot and I'd take a look. Was it valid? Was it not valid? So let's start with the first trade on the 12th of May. It was a long on XRP. And it looks like that one did not hit its target. It hit its stop loss, but let's open it up. Let's take a look. So I can see here that my trade was valid according to the 3XP entry rules, and price was tapped in. So that all looks good to me. I'm happy with that. And let's take a look at the outcome. And you can see, obviously, this one almost hit our target, and we did end up getting stopped out. So that was no good. So that's the process that I would walk through in order to review my trades. Let's take a look at one more. Let's take a look at a trade on NEAR on the 12th of May that entered at 9:30 a.m. And let's just open that up and make sure, obviously, based on your trading system, your entry system, you need to be able to clearly look at this chart and say, was this valid or was this not valid? Now, I can see based on the 3XP entry system that I use myself and that we teach our students inside of the 3XP Academy, this was a perfectly valid entry. You can see the price did tap in our entry. This passes. So what I would do is I would walk through top to bottom. This is how I review my trades each month, top to bottom, from first trade of the month to the last trade of the month. I walk through each of the screenshots. I would make sure that it is absolutely valid based on my strict mechanical trading rules. Okay. And if it is not, then what I need to do is I need to select a mistake type. Now, your review process may look slightly different based on the types of system that you're trading or the types of mistakes that you're prone to. This is the default that I use. So this is a purely mechanical trading system, as I've said, that we teach inside the 3XP Academy. And there are a small number of mistake types. So there's lots of different mistakes that you can make inside of a trading system, but most often they're going to fall inside a bucket. So there's only a small number of buckets that these mistake types will be. Things like checklist violations. So what that means is that we run a pretty strict checklist before entering every trade in the 3XP entry model. And a checklist violation mistake type would mean that you have messed up the checklist. So you've overlooked something, something looked right to you at the time, but it turned out that it wasn't. So they're the types of mistakes that we find quite often, actually, and that's why we implement a checklist. So a lot of people think they're above a checklist. I still use a checklist myself, and I've been trading for many years at this point, and the same system, right? So I should know this like the back of my hand. I still use a checklist. Pilots use checklists. Surgeons use checklists. Don't think you're above a checklist. No matter how advanced you are, a checklist is absolutely imperative, especially when you're in the real world markets, right? You've got money on the line. A checklist is pretty crucial there. So that's the first mistake bucket that we see happen quite often. The next one is a risk management violation. So this is more specific around total risk allocation at any one time. So we have pretty strict risk parameters in the 3XP Academy around our trading, and that specifically relates to the amount of open positions you can have at any one time. So the amount of open risk you've got, regardless of direction on the exchange at any one time. So if, say, you were to open a trade one day, okay, and that trade was still open the next day, and then you opened another one, but that went against your risk management rules, so you now had more risk than you intended live on an exchange, you would mark that down as a risk management violation. So these are crucial as well. These help you prevent, because we all know crypto is prone to these, wipeout events. Bitcoin will just drop 10% in an hour for seemingly no reason. And this is why we have this risk management in place, okay, to stop these total wipeout events. I've spoken recently in a few different emails and YouTube videos about the Luna collapse. So the ecosystem, Luna was one of the standout coins, for those who aren't aware, in the previous bull run. So that was in the that was 2020 and 2021, as the markets were sort of blowing off the top. Luna collapsed late in that cycle, but it was late in the cycle and it went to zero. So I was invested in a number of these coins, like a large number. I had a lot of money on the line here, and I lost everything because they practically all went to zero. And by the time I got out, it was worth nothing. So this is the sort of thing that our risk management caps protect us from. But yeah, I've gone down a little bit of a tangent here. So that is a different type of mistake bucket that you may like to have in your regular review. So the next one is discretion rule bending. So this is where there's two major things you see here. So this is one where the setup isn't valid, but you bend the rules to get into it, okay? Or the setup is valid, but you bend your rules and don't enter based on some sort of discretion, gut feeling, whatever you want to call it. They're both mistakes, okay? So if your system says to enter, you enter, okay? It doesn't matter what you think. The system says to enter, you enter, okay? And the same thing is true, but the opposite, okay? If the system says not to enter, you do not enter. It doesn't matter what you think the market's going to do. Follow the system, trust in the long-term expectancy of the system. So that's the next kind of mistake bucket that we quite often see. We see it both ways, okay? Probably none are more common than the other, okay? So we do see this quite often, but yeah, that is a common mistake bucket type. So another one is auto execution violation. So this relates specifically to mistakes live. So this comes in when you're trading live on an exchange. So using a market order where you were meant to use a limit order. Perhaps you've copied and pasted the wrong position size into the exchange, or it was meant to be set at contracts and you've set it at USDT value. There's a lot of different possibilities, especially when you take the information from a spreadsheet into live trading environment. There are a few different things that you can mess up here. So again, this is something that our checklist does our best to protect us from, but mistakes are inevitable. They're going to happen to anyone. Even world-class traders make mistakes, and this is why we track them so closely. So that's another bucket that we track, and the next is other. So this is obviously just a general bucket. This is where anything that doesn't clearly fit into the one of the other ones, you pop it in here. And this is actually why we have a mistake note column here. It is important to make a couple of notes. So you don't need to write an essay, but if you selected other, what was the mistake type? Okay, like talk me through that. What exactly was a mistake? So I tend to, when I'm reviewing my mistakes, I'll write down the type of mistake. I'll write down a few notes on what it is, but I also want to know how can I prevent that next time? Because that's the only way we're going to continue to improve our execution, right? Is it's okay to make mistakes. We've got, bumpers in place to protect them being catastrophic, but we do need to make sure that they don't continue, because making a mistake once is okay. Continuously making that same mistake is a problem, and that's going to lead to catastrophic losses, specifically on your trading. So that is absolutely imperative. It's okay to make a mistake in your trading. It's not okay to repeat the same mistake. And this is something I really live by. We must improve and figure out a clear solution for how we are going to avoid that mistake moving forward. That is the basic formula for how I would conduct my monthly reviews. So again, to recap, for anyone's not clear, you need to be tracking mistakes. You need to know what your mistake rate is. You need to know what type of mistake it is. You need to have a few notes on that mistake so that you know the details and know exactly how you're going to prevent that from continuing. And I would also strongly encourage you to record screenshots, both entry and exit. So I do like an entry and an exit just so I can see how the market moved. Maybe we can use this for, refining the system further down the track if you don't already have a proven system. It's just helpful to collect this data so that you do have it available. But you would work through one by one, reviewing all of the screenshots, ensuring that you've entered at the right level, the setup was valid based on your strict system rules. Everything looks good in the screenshots. Again, we're not tracking the P&L here. That's not as important as the actual execution, and work your way top to bottom. Mark a mistake anywhere that there was a mistake, make some notes, make some, give yourself an idea of how you are going to improve on it. Inside the 3XP Academy, we use our trading journal where it actually tracks our mistake rate. You can see in this section here. So let's assume I were to mark a mistake here, checklist violation. It would show up one checklist violation. We've got an 8.33 mistake rate. Okay, that's out of our acceptable range. And we would need to seriously put some work into making sure that improves. Now, obviously, there's a small number of trades here, and that's why it's such a big percentage, but we do try and keep our mistake rates at 5% or under, and that's a good benchmark that you can work off of yourself. So we can see here, if we scroll down, this is an equity curve. These are all the metrics that we do track inside of our 3XP Academy trading journal. The baseline is looking excellent at the moment, 58% win rate. So some of you may be looking at that thinking that is pretty average. You're only just winning more than you're losing, but you can see that the expectancy here is 1.18 and a net result of 48.98%. That is over 12 trades. Okay, so you can see here it's an extremely profitable edge that we've got in the market here. We also obviously track monthly stats. So you can see May, there was 9 trades. Net result on a $10,000 account of $3,136.80 with a net return of 29%. And you can see, some basic metrics for the month there. June is sitting very high. That's because we've only had 3 trades this month. You can expect that it will come down and sort of level out somewhere. Somewhere between 40 and 60% is typically what we see inside the 3XP entry system, the win rate, and that there's so many variables there. I can't tell you what yours would look like. Again, you may be using a different trading system if you're not inside of the 3XP Academy. But yeah, that's what our journal looks like. That's what our monthly trading process looks like. And that's where actually the baseline is sitting right now. For those of you who haven't seen the updates in the email, If you are not already receiving my emails, you can click the link in the description down below, grab your free copy of my daily trading blueprint, and you'll also jump onto my email list where I email out updates like this, operator notes, documenting things in real time, right? So if you're interested in that, you can click on the link down below. Now, if you're interested in finding out a little bit more about the 3XP Academy, then you can click the link down below in the description. It'll take you to a document. It's got all of the details there. So that's where we help our clients install a 60-minute daily trading routine into their lives. And it's actually the entry system we use is the one that you just saw in the reviews. And that is the baseline that we're currently tracking. So if that interests you, there's a link down in the description. No pressure either way, but if you want to check it out, all the details are there. With that being said, that wraps up for the day. So if you got value out of this video, a like or a subscribe is very much appreciated. Again, no pressure either way, but if you want more videos like this, I post these weekly. So you can hit the subscribe button and you get plenty more value. As I said, you can jump on the email list if you like by grabbing the 60-minute daily trading blueprint for our real world updates. But that's it for today. I'll see you next week.